On the 4-hour time frame, probabilities at the moment are higher to still take out this low. Therefore, from an Elliott Wave point of view, locally, it is more interesting to look for price moving down, unless a diagonal would form for the bulls, which is this gray line over here. You can see that in white, we have the WXY double zigzag. This is your diagonal wave A. So we look for price to then find support down here. Also, the more bullish scenario being the diagonal, then you look for wave X and wave Y. So that is also a bounce in a similar area. Maybe the diagonal moves a little lower, but it's still quite similar. And only the move up diagonal is basically bullish. And then you have the one that goes down. Keeping this in mind, on a 4-hour time frame, my areas of interest, where I am interested for at least the potential of a little bit of a swing, would be this green box, 72k to 67, and the red box for a move down being 81 to about 84. A diagonal could top here. Your wave X can top there. Even your wave B can top there as well. Now, it's an area of interest where I will observe the reaction and then I make my decision. Now, for the bulls, lower probabilities, they need a bullish diagonal, move up, get a diagonal, then retracement, then continue. So you got to push through this, take out these highs. Now, what I want you to be mindful of locally in this range is the bullish CVD divergences. Interesting resistance, 83k, 68k support. Psychology perspective, I just like to add this. We are currently in this range. Price has been moving down and down and down and down. I wouldn't mind seeing a little bit of a bait locally, baiting longs, but then we take out these lows because the probabilities remain higher to take out these lows. Of course, 83k, interesting resistance. Maybe that's the bait. Make a low, impulse to the upside. People think, oops, the low is in, but then instead we count a flat here. That's your wave C. You move down again. The early longs are liquidated. Then you grab that liquidity and then you actually get your bounce to the upside. From a psychology point of view and bit of like market maker perspective, that would actually be very interesting.